Tuesday. There's a sound. Now it's okay? 1, 2, 3. Yeah. Okay. All right. Hello there, traders, and welcome to the Friday's Market Wrap-Up webinar. Now, I would like to have it announced that I've got an official, beautiful studio around me at the moment here in Cyprus, in Limassol, and I'll be recording live on all my 3 times a week webinars. So today, welcome to the free live webinar of Bretton. It's sponsored by Academy, and basically we are live at this moment of time. Now, there's a lot to discuss this Friday. Today is the 2nd of September. Happy new month to all the traders around the world. And what we are going to be catering today as of Friday is something really interesting. Basically, we've got the Nfp Non-Farm Payroll today. So that happens, for the beginners out there, it happens every first Friday of every month. Now, it's the non-farm payroll data. It's quite important. I would say it's reasonably important if you tie that in with all the other data, economic data, like the gross national product, for example, data figures of the GDP, and various other ones that we have talked about in all our sessions. So let's just get going on to the calendar first, which is the economic calendar for today. And today, as I've mentioned, Friday, the 2nd of September, gives us the most important data with high volatility expected as well here for USD crosses, of course, but also we are going to be talking a little bit about gold upon popular demand. What's gold's position at this moment of time? And I want to talk to you guys about our previous forecast that went really well. 90+% of the forecast that we've talked about along the week, throughout the week, has actually gone really, really well, as predicted as well. And I want to show that to you guys live as well on price to price points that we have actually discussed and analyzed together. And I want to show you the exact rebound of prices as well. So very, very important. So now I'm going to be sharing my screen, giving you a little bit of an insight of what we'll be talking about today. And especially we want to go on to the Euro USD that loads of traders have actually asked me about. And because we have discussed Euro USD as one of the most popular popularly traded currency pair that's out there amongst all the other ones. So we have got price action on Euro USD at this moment of time. Now let me just make sure that I've got my screen shared as well. Let's just do that. Okay. All right. Okay. So we've got the screen, as you guys can see, it's on the euro versus the dollar. So this is the euro prices. Now we have done a fantastic forecast, all of us together, of course, on price action. And as you guys can see, this is the 4-hourly chart that is right in front of us. And this is on to the MT5 platform of 10 trade. And we have got price action that's shown, as I've mentioned, on the 4-hourly chart. Now what that means is every little candlestick that you see moves in within a 4-hour time frame, right? So after 4 hours you've got a new candlestick that actually appears. So right now euro is traded against the dollar at it's not 1.0, it has gone a little bit lower at 0.9986. Now this is a live account that I'm actually showing you guys at this moment of time. For those who are new to our webinars, I've got a list of new registrants, so I'm just telling you guys on what we are actually going to be expecting first, and then we'll do the analysis a little bit later. Now what's important in all our sessions is mainly about how we understand the sentiments of the market, and then we move on into analyzing the market throughout technical analysis, but mainly on trend analysis first, in order for us to cherry pick the right trades or the right instruments to trade for the day. All right, so here on Friday the 2nd of September, we're expecting lots of movements being influenced by the NFP. So NFP will only happen, let's say, in 6 to 7 hours time. So this is basically what we will be actually looking at. The whole turnaround of prices, volatility, liquidity as well will actually be impacted with what is to expect in the NFP figures as well. Of course, we've got all the other happenings that will actually be announced throughout the mainstream media as well. But right now, I would like to talk a little bit about what we have actually ridden along the Euro USD instrument. Now, with the Euro USD instrument, with Euro USD being our chosen instrument for today to actually look at in detail, mainly because it would serve traders of all levels to actually look at opportunities that we can actually trade, mainly within a sort of a range of price where I have drawn these two lines at the very top, as well as these two lines. If you guys could actually remember, we have started drawing these lines and these zones in red and blue starting on Monday's session. So Monday this week, we've started with all these lines, and you guys could actually then see how these prices have actually evolved and moved exactly, bouncing up and down in within that range. So what this means is that the prices, live prices of Euro USD is still expected to actually travel in within a range, right? So this is a range type trading, and we have benefited a lot in these kind of movements as well, even though it's in a range, right? So we've got three types of movements. We've got the upward type, bullish type movement, of course, that goes just high up and up and up and away towards the sky. And then we've got the bearish type movement that's called a downtrend, downwards towards the floor. And we've got the sideways movement, which basically we call it a 3 o'clock type angle, right? So we have got all these candles moving to the side, and we are looking at prices at this moment of time for Euro USD at 0.996564 area. And I would like to highlight the very beautiful touch point of price that was exactly and bounced exactly on the price that has been pre-drawn like a couple of days ago, and then the price came down and touched on that line that we have actually pre-drawn previously. So that is how accurate the price action has actually been, or that price action analysis on Wednesday, I think it was. But we started getting all these price action through drawing all these resistance lines, resistance zones marked by the red zone right there, as well as the blue zone on Monday, if you guys could actually remember. So we started warming up with the price action drawing on Monday, and then we see that more and more price action was respected in these levels on Wednesday onwards, and then right now here, as we can actually see, we have got this touch point of price right here, which was yesterday. So that touch point has actually gone directly onto the 0.9910 area, and we have actually talked about this, where we could actually had the sell here and then you take profit before the blue zone is touched, right? So I just want to give you a little bit of an idea of how much money traders could have actually made or have made. And we have got a list of traders who have successfully gone into the buy here as early as the 29th of August. They started that buy right there. That was actually a 78 pips movement to the upside. So what that means is if you're trading 1 pip or per pip $1, you've made $78 on that movement to the upside. If you have traded one lot, which is $10 per pip, that would actually be giving you 780 US dollars, and that's actually a one-day type movement. So that one-day movement would have made you 780 US dollars in a day if you have actually traded the Euro USD to the upside. And then we have continued to have given you that clue and that hint, as well as that forecast of a downward movement as well, if you guys could remember, because we have analyzed the market to be bearish for Euro USD across 3 time frames, if you guys can remember that. And that was a great movement to the downside, touch point exactly on that area, but we wouldn't have actually aimed at exactly there to actually exit the market. What I have drawn to be the forecast exit price was actually at 9930, if you guys can actually remember, and I've given the price of 0.9990 as your entry price. So if you were to have entered at 9990, let me just make sure, and you have then exited at 9930, that would be giving you 60 pips. So that is another 600 US dollars if you have traded one lot on that one there. And that was also a movement worth 1 day. So that was just a day. So imagine that you have actually entered the trade as we have given you all these signals as well, and traded together during our 3 sessions starting from Monday. Then you would have got potentially profited at 700 plus that 600 right there. Okay, so that's 1,300 in just a couple of days. I would say less than 3 days. So up to 3 days, 1,003, that's divided into 2 trades, and that's one for 700 on the upside and 600 on the downside. Now, what's going on with the Euro USD at this moment of time? Now, I could safely say that as I have done my trend analysis and a little bit of research on Euro USD and all Euro crosses as well as USD crosses, what we can actually see is that it still is in a range, right? There you've got this range of price right here between the 0.9929 right up to the 1.000 price range. So what that means is that we have got a upside movement that has gone from the bottom area here to the top area, and then a downward movement. Now it's on its way up. Now it's on its way up, but not really strongly to the upside. Mainly, if you look at the 4-hour chart on the screen right now, you could actually see that you've got a wick, like a needle-like formation at the very top of this candle right here. What that means is that, as you guys know, we've got all the courses that would actually tell you a little bit about candles and candlestick pattern. Now this pattern here has got a wick to the upside. Now the longer that needle-like formation is in the upside, the weaker it is for it to actually go up and up and up. So it doesn't mean that you've got a very long wick needle-like formation at the very top that it could actually go more. No, what that means is the longer the needle-like formation, the weaker the price would actually be to the upside. So what that means is that you have got a weaker or exhausting buyers in the market at the moment, and they are actually getting less and less, and then you have got more sellers coming into the market, and that's why it's got only the bones are left by the buyers. So we have got all these green like hollow candle right here, and we've got the filled up candles, right? So the filled up candles are your bearish candle marking all the price falls, but then these candles here marking the upward type movement. So we are expecting prices to go up and up a little bit more perhaps, and then touch point at this area here and find resistance. So what does that mean? That would actually mean it's probably better for us, if we were to be buying, to be very alert and basically exit the market before prices touch at the 1.00 area. Now, in my opinion, it's probably best to actually exit at 0.990. Now, 0.990 is exactly 10 pips below the psychological level of 1.000. Right? So remember, we've actually talked about psychological levels, psychological prices, and psychological price levels and price zones, and they consist of 4 sets of psychological numbers that I've picked out along my 15 years of trading, and they have actually been very, very successful, very useful in entering and exit the market. So if you guys want to know more about how do you actually enter the market or exit the market using psychological numbers, we have got tutorials at the 10 Academy as well as the Bretton Academy, and we have got the whole platform there consisting of hundreds of videos that will be made available to you, so you can actually watch in your own pace, understand each one topic properly, and then you apply them as ingredients for your technical analysis side of things, right? So there you go, guys. We have got Euro USD covered. Now, all I could actually give my opinion on is the current price movement of Euro USD to actually be going up a little bit more, but I have got a bit of a surprise here for you to give you a little bit of a I would say an alert system right here based on a bearish candlestick right here. Now, I've mentioned that price could potentially go upwards a little bit more, but it looks like it's got more battle with the sellers at this moment of time. Mainly it is due to this bearish mother candle right here. Now, this bearish mother candle, I will actually be marking the opening price of this mother candle as an area that price could start to actually fall a little bit sooner than later. So we have talked about the possibility of euro versus the USD to go up a little bit more until it maybe touches this point, but looking to the left, as I've mentioned to you, that it is a very crucial technique or strategy to always train your eyes to look right and left when you're actually looking at the chart. Now, when you look left, you're actually looking for powerful mother candles. Now, significantly visually obvious to actually see that these ones here are mother candles, longer candles, not short ones with wicks at the top or wicks at the bottom or the needle-like formation. We want to always look at really huge candles like this, significantly large. Visually, it's very logical to see it as significantly powerful mother candle. So here, for example, we have got a bearish mother candle right here. So I've just drawn a red line, as you can see, a horizontal red line on my screen that marks the opening price of that very powerful mother candle. Now, that mother candle itself, because we are looking at the 4-hour chart, is worth in pips about 50 pips. Now that 50 pips movement is quite significant. Usually we measure it based on time frames as well. So in the 4-hour chart, anything above 30 to 40 pips would actually be regarded as a significantly large movement, because that's usually traded by scalpers in lower time frames as well, within the 10-15 pips. But then when we look at a chunk of 50 pips in a single mother candle, that's actually quite powerful. All right, so this is really good for us to understand that Euro USD at this moment of time may have a potential to start reversing sooner than later. Now there's a bit of a confirmation that we can actually do. We can always click onto the indicators section and apply an indicator that's called the stochastic. This is an oscillator type indicator. You don't need to change the parameters or anything like that. Just click on OK. But again, we have got loads of tutorial on each one indicator as well. So look that up onto the dashboard, especially on the 10 Academy and Bretton's dashboard. We have got tutorials, very short videos detailing to you on how you actually apply the oscillator or the bunch of oscillators that we've got. And I would like to limit myself in using or applying loads of indicators at a time. So I've got another video as well that would actually help you understand how do you actually apply each one category of indicators for what purpose. That is really important. Now, we are applying the stochastic at this moment of time to give us a little bit of a hint. Now, remember, these are all lagging indicators, so they're not 100% accurate. They'll never be 100% accurate. But what's really important as a trader is always to have a variety of tools that you could actually have in order to confirm the market for you. So we don't rely on just one indicator or one technique and one strategy. It's really important for us to actually have a mixed bag, but to organize it properly throughout the trade plan in order for us to actually be really careful in making that financial decision making or that trading decision, in picking out that right pair with the right trend and entering and exiting properly as well, right? Okay, there you go. So we have got the stochastics now applied. Now what I use the stochastics for, which will be explained in the video as well, the short video tutorial on stochastics, is to look at whether or not we have got a reversal, okay, and whether or not there's a mismatch between the stochastic and also the price action on the candlesticks itself. So I'll just explain to you what I mean by that. Now we have got a high of the price right here. It went down to the bottom, so that's the low price, and then it's got the current price here. So if we were to draw a trend line, let's say, from the peak or from the high to the current price, that is obviously a very simple looking downslope of a trend line, right? So that's a downslope type trend line. Now what we do next is we draw the same onto the stochastic right here, that blue line that you can actually see on the stochastic, and you drag that line from the top and from the to the current price as well here, and you can see that it's quite similar. There is no mismatch or there is no divergence, but there is convergence. If there is convergence, that basically means that it's a match between that slope drawn in blue and that slope that is drawn on the stochastics in blue as well, and they match. If they match, that basically means there's no reversal as yet. Right? Just roughly, it wouldn't be 100% accurate all the time, but this is just a hint that on the 4-hour chart, there is no clear divergence. We want to look for divergence. That means a mismatch. If, for example, we see there is a downward movement here, like a slope to the downside, but then here on the stochastic itself, you see a total opposite upward type slope, then that means there is a divergence, there is a mismatch. If there is a divergence between the price action on the candlesticks and the stochastic, that basically means that there is a reversal coming up, right? So if it's a downtrend, that means there's a reversal to go upwards. So now, from what I could actually see on the 4-hour chart, it does actually look like it's weakening to the upside, so there will be a continuation of trend to the downside for the Euro USD. So just looking at that alone and applying the stochastic, it's showing us that no, it's not probably going to go up and burst out and breach that reversal and start a new trend. It would actually be more biased towards a continuation of a downtrend, and the buyers would actually be weaker and bringing prices downwards, and the euro would continue to go downwards. So what do we do if we are looking at an expectation of euro going downwards? We want to actually sell the euro, of course, right? So if we are going to be looking at selling the euro, we need to understand where are the exact pain points that are good for us to actually sell the euro, especially, right? So there are resistant areas, there are areas that would actually be good in terms of price action as well, ideally using the psychological numbers that we have talked about a lot, the 4 sets of psychological numbers, the 00, the 20, the 50, and the 80. Now all that will be explained to you in the videos as well, the video tutorials that we have. So here, as we can actually see, it is already starting to weaken in terms of the price for the euro, and we have got that wick really high up there as well. So my expectation is for the price to continue to fall and basically play along a very nice 50 to 60 pips downward movement to actually enter a sell. So that entry of sell could ideally be at 0.9990, not now, not a bit later, but probably do a pending order. If you guys want to do a pending order and leave your computer to do the whole work for you, then you can actually have the pending order set up for a sell for Euro USD at 0.9990. For those who want to be a little bit more conservative, you can actually sell a little bit later as well at 0.9970. So 9990 would actually be an ideal area that I would mark as an ideal sell entry. I'll mark this as green line so we don't get confused. Let me just mark that at 9990 right here. Okay, so that is your ideal entry price for Euro USD right here. No, I think I've got that one wrong because it has actually gone under 9990, so we'll just have to take the next best price of entry or entering a sell, because this is a live account that is moving with live prices as well at this moment of time. So the ideal price, next ideal price would actually be at 9970. So you guys remember the principles of using psychological numbers. If you are entering a sell, you want to sell 10 pips under the psychological number. So the closest psychological number as of now, mirroring the current price, is at 0.9980. So you want to look at the last 2 digits, 80. So 80 needs to minus 10 pips down in order for us to enter at an ideal selling price. So the selling price would then be ideally at 9970. So what you can then do is just simply to set yourself up a pending order selling at 9970, right? So I'll adjust that, and that's where your entry trigger for a sell would actually be at that horizontal green line, right? So you guys could actually enjoy your Friday from now and just put that as a pending order. What a pending order is really very, very cool. All you need to do is click onto that new order section right there, and you change the type market execution to pending order. What that means is you put the right price of entry, you put the right price of exit, and you can close your computer and you let the computer do the work for you, right? So you let the platform, 10Trade platform, to actually do the whole taking of profit and entering, and you want to also set your stop loss. So you can actually set your stop loss on how much in terms of risk, in terms of dollars and in terms of pips as well, right? So there you go. You've got your buy limit and all other types of orders here. You can actually go onto a sell stop, let's say, or a sell limit for this order right here, but make sure you enter the take profit and the entry price correctly, right? So you've got your price here. So this price area right here, you need to then key in your 0.9970 at this section here. You can put your sell stop there. You can put your take profit area at 9930 as well. But in order for you to be a little bit on the safe side, it's probably best to look at 9935, 9936, right? So that would actually give you 20 plus pips right there for a sell if you want to actually take that pending order. That's 20 plus pips or 25 over pips or so as your potential gain, but also look at that as potential loss. So you want to always calculate your risk exposure. You want to understand, we've got all the videos there on the risk management, money management side of things as well that I've explained to you on how do you actually choose your lot sizing together with your trading capital. Now, your trading capital would also help you decide on which time frame would actually be best or probably best fitted for you. So this is where I would actually be explaining on our courses as well, where it would actually take you through in properly understanding the risk and money management side of things, because the whole process of becoming a successful trader in trading online has got the mind method, and also your mind and method is really powerful together with your you've got mind, money and method. So the money side of it, money and risk management, would consist of 30% of the entire process, but the mind side of it would consist of 60%. So you've got 90% there that needs to be taken care of really carefully. So on the money management side of it, that would actually cover the lot sizing and various other elements, really powerful elements would actually be covered in the video titled Money and in the category of money and risk management. Okay, so that's a very, very powerful side of things, and we want to always look at ways to actually visit our trade plan as well. So there you go, a very, very simplistic what do you call that, coverage on Euro USD at this moment of time, just to give you that whole idea that there is something that we can actually trade on an intraday short term for today, because today is Friday. Now Friday, I wouldn't be encouraging traders to actually keep their trades open over the weekend, because we don't want to get surprised on the market gaps that would actually be very risky for us traders especially, all right, us retail traders especially. So there you go, this is roughly an idea right here for you guys. There's a good sign here giving me the wicks on both ends right here, and it's quite parallel. It's not exactly at the same level, but that's a sign there that there is a likelihood of that reversal. We've looked at that reversal as well, potentially from the stochastic. So this is your trade idea from myself for today. We start off with the Euro USD. I want to warm you guys up with some little trades as well, especially with Euro USD, and then I want to bring you straight onto our previous analysis on gold, because there's just so many demand. I mean, demand on analysis on gold comes to me every hour by traders, so I want to actually help traders traders in that way to keep them a little bit informed on not only hour by hour but also medium term and long term as well, so you get a bigger picture of not only gold's movement but precious metal as well as your commodity currencies. If you guys can remember, commodity currencies are your Australian dollar, New Zealand dollar, Canadian dollar, and your ZAR as well. Really powerful movements are coming out from the ZAR, South African Rand. So the South African Rand versus the dollar is looking like it's giving us some setups. We've talked about this in our private groups as well, in the Facebook groups, as well as the private groups on Telegram and also WhatsApp. So we have got some really nice interaction with traders talking about the ZAR versus the dollar from our good fellow African traders in Africa especially, and they are actually in a pool at the moment and trading the ZAR versus the dollar. So we have also got some interesting combination of ZAR versus the pound, ZAR versus the CHF, ZAR versus the dollar, of course, that is the most common one, but we are looking at some very interesting movements with ZAR versus the other type of currencies, especially the major currencies like the GBP, even the Australian dollar, but mainly the GBP and the CHF. Really very interesting movements, and we could actually use these kind of analysis based on these different instruments as our tool to actually gauge the main combination of ZAR versus the dollar. Okay, there you go, guys. So this is on Euro USD. I know the coverage is a little bit more on Euro USD, but guess what? We have got correlated pairs of Euro USD, and also because we have got popular trades on USD JPY usually, or JPY crosses when it comes to the NFP. Of course, the major crosses and the JPY crosses as well. And we've got some very interesting traders going on to your GBP JPY, your Euro JPY as well, right? Okay, there you go. Now enough on Euro USD. So let's just look at it. And we have got a comment from Jacob. And Jacob, how are you doing, Jacob? You are on... You're talking about Euro USD to break out. Yes. Let's take a look a little bit more because this would actually pave out the way because Euro USD is being the most popular traded and the highest volume and liquidity of trade revolves around Euro USD. So it's worth for us to actually talk about Euro USD as well, being sort of the safer type of pair amongst the safer ones to actually trade during an NFP, or throughout the NFP announcement as well, before and after. So as we can actually see, I think there is a continuation, in my opinion, on the downside. But if it does break out this area right here at 9910, then we are looking at a very big rainfall drop of the Euro USD further down. So right now, at this moment of time, from the research that we have done in our team right here at Bretton Academy, we found that the overall forecast of the jobs, the jobs number for today would actually be at 300,000 jobs, new jobs. Now, they have actually measured this possibility to actually be more and more possible because of people coming back to work in the States, right? So this has actually been a sort of a motivator since last week to actually get the news out there in the open, especially mainstream media has actually played the sentiments to be biased on the positive side. What that means is that there is a bigger likelihood of US dollar going up as opposed to going down if we are looking at positive or expecting positive figures on the job numbers, right? So if we're expecting good NFP results today, then the bias would actually be on the positive side. So if we are looking at a positive side on the US dollar, that basically means that we're expecting further drop of the euro. So that can actually be confirmed once we look at the prices coming downwards and breaking out breaking out from the 9910, 9900 area, especially coming downwards at 9890, then there would actually be a beautiful entry for a further sell of the euro versus the dollar. Okay, so in my opinion, I think there is more likelihood of a further rise of the dollar. But again, we want to actually monitor the markets and look at all the powerful hints and clues that we have from price action itself, together with what we could actually gather from mainstream media later on once the price has actually been announced, the data has actually been announced on NFP especially, right? Okay, there you go. Now on Euro USD on the daily chart, as you can see, it's very clear on a sideways movement. So the longer that sideways movement is, the bigger the breakout would actually be, either on the upside or the downside. So we want to ride the trend, right? So at this moment of time, if we are looking at the daily chart, it's a very clear downward movement, bias to the downward movement as an overall picture for Euro USD, but there is a likelihood of further or continuation of the downtrend for the euro, right? Okay, there you go. So that's for the Euro USD. I hope you guys would take that into consideration to act on it by entering trades, or basically what you can actually do from now in order for you to enjoy your family time and your Friday time is to actually go on to your pending orders and just set up your pending orders as per the prices I've actually mentioned earlier on. Okay, all right guys, so let's now take a look at gold. Okay, upon popular demand. Now I've got very good news for you guys on gold. Now gold, as it has been drawn. Now I have drawn this wonderful geometric pattern. It's a copyrighted pattern of mine, and I've drawn that pattern as of last week on Friday. So last Friday, a week ago. Now that was drawn when the prices that you can see was only at this area right here, right? Not under this B point. So we have got this geometric bearish pattern that has actually already hit the TP, the take profit, right on the dot. So the prediction was 100%, right? For on gold on this phase. So what we want to look at is whether or not we should actually be starting in looking at the upside or the bounce of price for gold to the upside. So let's do a very little analysis on gold. Now, before I forget, congratulations to all the traders who have actually hit that TP right on the dot right there. I've got loads of emails, wonderful emails since yesterday. So congratulations to you guys. And that was a significant, beautiful movement for a sell in gold. And now we are looking at whether or not we have got a bounce in gold. Now, looking at prices right now, it's actually trading at 1704. So what that means is about 1,700 per ounce, right? It's trading in US dollars. So that price of gold is looking like we have got more bounce of price, but we need to be very careful, mainly because the movement of prices of gold is governed by loads of bearish mother candles to the left. So that means we need to measure our movements, and we need to be entering and exiting timely, right? And we want to be careful with our trades as well, especially in this period. After the Jackson Hole meeting and after the NFP, we want to be a little bit careful, mainly because of all this volatility and liquidity may be kicking in. It's great when you've got high volatility, but together with it, we've got risk as well, right? So we want to have that in balance and in check. So this is what we are going to be doing for you to help you keep that balance and in check of the entire market's movement and volatility from Monday onwards. So Monday, we have got loads in store for you in terms of knowing and understanding that whole movement for the week. So at this moment of time, let us go back to gold, and we start afresh with less lines and less drawings of the patterns and stuff like that. Let's do let's do a little bit of a trend analysis on gold, and we usually start off with the 1 hour chart. So I'll take you through 1 hour, 4 hour, and then the daily chart. So in the 1 hour chart, for example, we have got price action at this moment of time. There, see all these cluster of candles, they are under all these three lines. Now I know I've mentioned to you guys that if you guys want to know all the indicators that I use and you want to know more about how to apply them and all that, they're all covered in the videos that I have and will be launching it, and you will have access to it as traders in our platform. So once you have actually done that, know about how we can actually apply certain indicators, then you will be able to get that right information about the trend movements. Now, the number one trend indicators that I use, or I don't use very many indicators, but the one that I actually use are the three lines that you can actually see. The 50 exponential moving average right here, the 100 and the 200. As you guys can see, we have got all these candles under all three lines, so that gives us a little bit of a bias, even though they're actually moving upwards, but the price actions of these cluster of candles are under all the three lines. So because they are under the three lines, that means they are under the water. They're actually biased to the downside, or in other words, downtrend bias. So gold is on a downtrend bias on a 1 hour chart. So what we need to do is compare to the 4 hour chart and get a better picture, right? So as we go on to the 4 hour chart, you could see that the candles, I mean, a lot of traders, they make that mistake on just looking at that single candle. So they will look at that single candle and say, oh, you know, gold is bullish. No, gold needs to be looked at, and not only gold, all other instruments needs to be looked at as a whole first, and then we break that up to short term, medium term, and then long term. So here we're looking at the midterm type analysis for gold, and it is matching to what we have actually seen on the 1 hour chart. So that basically gives us again a second time bias to the downside again, right? So there may be a bit of a correction to the upside, but it's not an uptrend for gold as yet, as I can see from short to medium term. Now we need to move on to the longish term and then look at what's happening with gold. So here we can say that, safely say that there may be a bounce upwards, but that is just a reversal. So it's not to be excited or get overly excited about the movement to the upside for gold for now. Maybe next week, maybe a little bit later, in terms of change of a total trend for gold to the upside, yes, but not just now. At this moment of time, it may only be a bit of a correction to the upside. So traders, for the shorter term, you can actually, you know, start buying a little bit of gold, but then this is just to ride that correction, but not to ride the trend, because the trend, overall trend, is still to the downside. But then it's the key is the timeliness of entering and exiting the market, together with understanding the current trend. Okay, so there is a likelihood of a bounce right here, which gives me a possibility of a double bottom type pattern. So that does actually give me more possibility of a bounce to the upside for gold, but that again, I've mentioned, it's probably a little bit of a correction, a corrective movement. It all depends on what goes on with the politics, geopolitics, and current economic condition in the States as well, because that would actually pave out a lot of ways for gold to actually move, whether sideways, upwards, reversals, and various other movements that you know, the instruments could actually go into. So this is what we will be actually covering next week on Monday, because this of what has actually happened in the jobs market in the States, the NFP figures would actually pave the way with confirming the current condition and the current economic situation of the States, because they're still battling with the inflation. Now the inflation is kept at steady, but the thing is that you know, it's just coming in with loads of factors that are still gearing up that inflationary mood or inflationary sentiments in the market. Okay, so that's basically it for gold, guys. Okay, Any questions, guys? I'm opening up the floor at the moment for questions about your trades, your current trades, or anything that I've mentioned and that you have got questions on. Questions from the room. Say that again. Yes, not yet. Yeah, yeah. Okay. So no questions. If we have no questions, then I'll end the session for today. But if you guys have got questions and you want to ask me later on as well, like I've mentioned, email us, and we have Toby as well to assist in all our analysis as well as our guidance and mentorship. So you can always email me or Toby and get in touch with us on the social media groups as well. All right. No questions, guys. As I can see, we have no questions at this moment of time. I hope it has actually been fruitful as well as clear on especially the two major instruments that I've shared with you on Euro USD, as well as goals positioning at this moment of time. So at this moment of time, it's a little bit too soon for us to actually look at prices to the upside for gold, as it is just a corrective move. But we may have loads of trading opportunity for gold, but I would guess it would be more into a range, right? So that range movement would actually give us some opportunity of a zigzag sideways type opportunity to trade. Okay, guys, I think we have no questions at this moment of time. So what I will then do is to have us welcome you to send me emails with your questions, and we'll take it from there. Okay, so meantime, guys, I would like to say a big thank you to you guys for attending my webinar today, and I want to wish you guys a restful, great weekend, and then we'll meet each other again on Monday during the week ahead webinar. All right, guys, thank you very much for that, and I would like to end this